Here are 5 news stories from the world of the crypto industry. First, news. The Binance crypto exchange has listed 3 meme coins at once. Binance, the world's largest cryptocurrency exchange by trading volume, has added several meme coins to its platform: Nairo, Turbo, and Baby Dogecoin. Following the listing announcement, the prices of these meme coins surged by tens of percentage points. The Nairo meme coin appeared on the crypto market in July of this year. In the community, it is often referred to as the younger sister of Doge because it was created after the owner of Kabosu, the dog that inspired Doge, got a new pet named Nairo. As for the Turbo meme coin, it was developed by the globally known AI chatbot, ChatGPT-4. Baby Doge owes its creation to fans of the Doge meme coin. After the listing, Nairo's value increased by 600%, and its market capitalization reached almost $127 million. The Baby Dogecoin rose by 55%, while Turbo showed a modest growth of only 16%. Binance warned users that meme coins might show high volatility in the coming days. As these are new assets, there is a risk of sharp price fluctuations, so the tokens have been tagged with a monitoring label on the platform. Second, news. Toncoin price is recovering. Toncoin's price dropped by 4.6% over the past 48 hours and is currently trading at $5.63. The weekend pullback is likely to help buyers regain bullish momentum as Bitcoin confidently holds above $60,000. With the release of $1 billion in Ton USDT on the network, engagement and activity are expected to increase. Toncoin's price is recovering as the Ton network surpasses the $1 billion mark in USDT. According to Tether's official transparency page, authorized USDT issuance on the Ton blockchain has exceeded $1 billion, reaching a total of $1.03 billion in $2. Of this amount, approximately $309,325,516.46 is authorized but not yet issued, while the net circulating support is $712,158,737.86. This milestone indicates growing demand for the stablecoin on the Ton blockchain. Since USDT plays a key role in cryptocurrency transactions, its sufficient supply should increase liquidity, making it easier for users to trade, exchange, and store value on the network. This will boost user activity and engagement on the Ton network and potentially increase demand for its native cryptocurrency. Amid the recent market recovery, Toncoin's price has shown a V-shaped reversal from $4.40 to $5.20, a 26.5% increase. This reversal from the 50% Fibonacci retracement level marked the prevailing correction as a healthy pullback for buyers to regain bullish momentum. If the Ton price consistently holds above the 200-day exponential moving average, buyers could rise by 8% to challenge the descending trendline. This dynamic resistance has persisted since early July and has maintained a selling mood after the Ton rebound. Thus, a potential breakthrough of this barrier will accelerate buying momentum and increase the price by 40% to $8.276. Third, news. Stablecoins will become the primary global payment method. Stablecoins may soon become the primary payment method worldwide, said Dante Despart, head of global policy at Circle. This asset class has every chance to dominate the international financial system, he said in an interview with Cointelegraph. According to the top manager, his company is seeing increased interest in stablecoins from firms focused on internet payments and various financial services. This will provide momentum for a new stage in the segment's development, Despart noted. Circle believes that stablecoins will become the main currency of the internet era, said the representative of USDC's issuer. At the same time, the expert acknowledged that stablecoins need effective and fair regulatory frameworks. Most countries worldwide should reach a relatively unified consensus on this issue, the top manager said. In Despart's opinion, the key principles of conservative reserving and anti-money laundering measures should be observed by all companies. He also pointed out the need for swift adoption of a stablecoin law in the United States. The main question now is whether the United States will finally adopt federal regulations for stablecoins or continue the status quo of uncertainty, which both political parties in the U.S. consider unacceptable, Despart emphasized. The expert believes the lack of regulations for this asset class poses a threat to U.S. interests. The top manager thinks this situation could create a vacuum that will allow products to exploit trust in the dollar while bypassing regulatory laws. Fourth news. Weekly inflows into crypto derivatives amounted to $436 million. Investment company CoinShares specialists recorded an inflow of $436 million into cryptocurrency derivatives last week. This is the first positive result after 2 weeks of outflows totaling $1.2 billion, from August 26 to September 8. According to CoinShares analysts, the sharp positive trend is driven by a significant shift in market expectations regarding a possible 50 basis point interest rate cut by the U.S. Federal Reserve on September 18. Former president of the New York Federal Reserve, Bill Dudley, who previously advocated for a rate cut, said at the Future of Finance Forum hosted by the Bretton Woods Committee in Singapore that there are strong reasons for a 50 basis point rate reduction. He added that rates are currently 150 to 200 basis points above the so-called neutral rate for the U.S. economy, where policy is neither restrictive nor stimulative. So the question is, why not just start? Dudley concluded. As for CoinShares market report, it also noted that trading volumes of cryptocurrency exchange-traded funds remained unchanged at $8 billion for the week, significantly below the $14.2 billion average in 2023. Regionally, the largest inflow was traditionally recorded in the U.S., $416 million, with Switzerland and Germany also showing notable inflows of $27 million and $10.6 million, respectively. Canada saw a significant outflow of $18 million. The primary focus was again on Bitcoin-based investment products, which attracted $436 million after a 10-day outflow totaling $1.18 billion. In short Bitcoin positions, after 3 weeks of inflows, outflows resumed last week, amounting to $8.5 million. Ethereum was the only asset, aside from short Bitcoin positions, to see outflows, totaling $19 million. According to analysts, this is due to concerns about the profitability of Ethereum's base blockchain following the Denkin hard fork. This March update reduced fees on second-layer Ethereum-based networks by 60 to 90%, leading to decreased activity on the main blockchain. Spot Bitcoin ETFs were launched in the U.S. on January 11. In total, 12 funds are traded on Nasdaq, NYSE, and CBOE, with total inflows of $17.3 billion and assets under management of $54.31 billion. The most successful is the IBIT fund from the world's largest investment company, BlackRock, available on Nasdaq. Since its launch, it has attracted $20.91 billion, with Bitcoin assets under management totaling $21.39 billion. Conversely, the GBTC fund from Grayscale, traded on the NYSE, continues to show the worst performance due to the highest management fees in the industry. Investors have withdrawn $20.04 billion, but Bitcoin assets under management still amount to $13.27 billion. Other funds, including the new Mini Bitcoin Trust from Grayscale, show positive results. As for spot Ethereum ETFs, trading began on July 23. In the U.S., 9 funds are available on the same Nasdaq, NYSE, and CBOE exchanges, with the best performing being BlackRock's ETHA, with an inflow of $1.03 billion, and the worst being Grayscale's ETHE, with an outflow of $2.72 billion. At the end of August, the U.S. Securities and Exchange Commission, SEC, rejected applications to launch SOL ETF from Van Eck in 21 shares, citing concerns about the disputed status of the asset. Fifth news. An expert predicts Bitcoin's growth to $150,000. Signals for a breakout movement in Bitcoin have formed within the range of $100,000 to $150,000 by the first quarter of 2025. This was noted by investor and co-founder of Ox, known as Elja. The analyst identified a cup with handle pattern around bottom, the cup, followed by a consolidation phase, the handle. This formation indicates a period of sideways movement in a narrow range, often preceding a major bullish breakout. The cup began to form after the peak in late 2021, while the handle appeared after the price retreated from resistance levels at $65,000 to $69,000. The model is confirmed after breaking through the final resistance. This suggests a subsequent rise by an amount equal to the maximum distance between the neckline and the lowest point of the cup. An analyst known as Nestai highlighted the most explosive combination of technical indicators in cryptocurrencies in the past 8 years. Among them are Bollinger Bands, RSI, Stochastic RSI, and the Crypto Fear and Greed Index.